Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and always interesting stuff right in the middle. Well, this was a week that started out calmly, everybody waiting for the FOMC announcement, which would come out on Wednesday afternoon. Oil, well, that continued to lead the market around, well, like a little puppy following its mother. World markets also were on hold for the first half of the week, waiting for the FOMC and digesting those big moves that came out after the ECB meeting on the previous week. Of course, in that meeting, the ECB indicated, Mario Draghi said that, well, they're practically done. And that, of course, sent the euro currency flying on the upside. That was 2 weeks ago. And then, everybody waiting for Wednesday afternoon. Well, no disappointment there, as there was tons of action after the FOMC policy announcement came out. And then Janet Yellen gave her Q&A. And what really happened was, well, it was a much more dovish tone. What happened? Well, the dollar collapsed right through some pretty important supports that we were looking at, and that really moved the markets pretty significantly. Euro moved up sharply, the yen moved up sharply, gold and oil, they moved up sharply, and stocks at first, well, they moved down pretty heavily. But then, of course, the dust settled, things started to calm down, and the buyers came back into the stock market, and that pretty much continued right through Friday afternoon as we do this show. Essentially, as the dollar falls at some point, you would expect that holders of dollar-denominated assets, well, that would be stocks and bonds, of course, they would get nervous as the value of their holdings decline based on the dollar movement. That, of course, may yet to be seen, and we will wait to see how that comes in coming months. So it's a longer-term picture. Speaking of longer-term picture, you can see in my big picture analysis on the dollar, which I did this week, what my opinion is of this weak dollar and how it's going to affect other major markets. So definitely something worth seeing. So take a look at that in the members section. The oil market, well, that continued to move upward, getting over $42. Remember, the low in there was some $26 back not too long ago. We had talked about that being a major bottom. You can also see that video in our big picture analysis category of videos in the website. Of course, what is going on is that the hopes that there's a stabilization in the supply-demand situation is giving oil a lift, as investors are saying, well, the worst is really behind it. There could be a lot of short covering going on also, based on the fact that oil producers, those countries have agreed to meet in April, and that is there's a hope that they will freeze the level of productions maybe at lower levels than they are right now. But I think that's a lot of wishful thinking out there. I'm just going to say good luck with that when it comes to Iran, who is, had the world's thumb on them for all of this time period, and they feel like they have it coming back and not cut production. So good luck with that, we'll say. And I think that we're going to see a lot of volatility in the oil market going forward as we get into probably a wide range, maybe 35 to 45, which was our upside projection for the year. Gold choppy in a range, not quite making it back up to the high it did in the previous week. And bonds also choppy, moving down on the Fed dovishness, but then getting a bid coming back and chopping back and forth, ending the week on the firm side in the bond market. As the Fed's dovishness seems to give it a little support, I'm going to change the word to dovishness to confusion, because that's what I think the Fed is. Totally clueless. Next thing, well, we're going to look at our 60-minute chart of the stock market, where we look at the overnight trading and the day trading and look at what actually influenced the moves on a 24-hour basis. Take a look here at our 60-minute chart of the E-mini S&P 500. The gray area is the overnight trading and the white area is the regular trading hours. You can see that everybody was waiting for the Fed through this period as they were just trading in a wide, choppy range for those, well, 2.5 days. Monday, stocks were weighed overnight by oil moving down about 4%, but then they got a boost in here as the producing nations said that they were going to meet in April, talk about a production freeze. Tuesday, well, not much going on either overnight, but significantly, the Bank of Japan removed the negative interest rate policy language from their policy statement. And that, of course, says that they're really getting the picture that this negative interest rates, this whole grand experiment for 25 years is just worthless, and maybe they are changing their tone. PPI comes out down 0.2%, but the core rate is up 2.3%. Retail sales were on the softer side, and you can see they got a rally back during the day after that softer night. You also had some selling into the overnight market on Wednesday before the FOMC meeting. Everybody was waiting. Core CPI also comes up on the strong side. Rents and medical costs are rising. Housing starts best in 6 months. Japan comes out and says, well, they could see minus 5% interest rate. That's their negative policy, which is only 1/10 lower than it is now. So they're really hedging the ability to cut rates any further. And then comes the FOMC announcement right over here. You could see that as this giant break in, giant rally here in the stock market, which seems to always happen after the FOMC announcement. They lowered expectations that rates were going to go up, and they were looking for four interest rate increases over the year, and now they're not even saying they can get 2. They have fears about global economies. Oil soars, gold jumps really strongly, and the confirmation that the producing nations are going to meet in April. So that gave a big boost to oil. Post FOMC on Wednesday, on Thursday, you can see that, well, they tried to continue the rally right over here, but then all of a sudden the dollar collapses at this point, and it really shakes up the stock market indexes, and they have a big break in there. Oil continues to recover over 41. U.S. stocks, mostly weaker, start to rally. Amazon has a decline. We'll talk about that stock later on as Apple moves to Google Cloud Services, and Federal Express soars on good earnings. Show you that one also. And this stock market has an explosion to the upside on Thursday, despite that shakeup because of the weak dollar. Friday comes and the market continues to get a bid in it. Eurozone, not much going on in there. What's interesting in here is Japan down 1.3%. Their yield curve inverts, and that's, of course, a cautious sign for recession, not like they haven't been in one for all these decades. So Japan, a real problem out there. Do you know that Japan total private and public debt to GDP is over 500%? Talk about a debt bomb waiting to crack. It's right there. Oil gets a lift again, but then reverses, and the stock market then starts to waffle. You can see that as oil starts to reverse. And the overbought energy stocks, well, they start to pull back. So that is what has moved the markets this whole week in our 60-minute chart of 24-hour trading. Take a look here at our calendar for the week, and you'll get a sense for what's coming up. in the next week. You'll see here that there's not a lot of earnings reports, of course. Any big ones, stuff that I follow and trade. Nike after the close on Tuesday. KB Home, not a bad one to look at on Wednesday after the close. That's not a lot else going on in there. GameStop on Thursday. And then you can see economic events. Also, no major market movers that I can see in here during the week. Of course, we come to Friday, which is Good Friday, and we have equity and bond markets closed on Friday. So we still get a little bit of news out, but basically not much really on that calendar. So that's the opening segment for the week, and we'll be right back with the best and the worst. Best of the week. Well, with the stock market essentially a train moving upward pretty steadily, that's especially after the FOMC announcement on Wednesday, we've had quite a number of stocks with pretty good gains. We'll start out with one that, well, kind of was a favorite and then all of a sudden just fell to obscurity. That's Triple D. That's the 3D printer. This is a case of the bad news being not quite as bad as expected. In this case, they beat on earnings and revenues. They didn't fall as much as expected. So take a look here at the stock of Triple D. Actually, as far as our type of method goes, as we look at charts, this one does not have great cycle patterns, as we call it. About 80% of the stocks we look at have pretty readable patterns. In this case, you note we have Stratasys on here, the other one of the major 3D printing companies, and that you can see that cycle bracket right there is clearer to us than Triple D is, and that actually tracks this one pretty closely. So we use that one there. What's significant when we look at this is you note these highs right over here. This was a cycle peak right there, and now we've gotten above it. What that says to us is that a major bottom is in place. Now, that we don't think this stock is going to just go screaming more. It goes from 6 to 15. I would expect that it would have some corrective process in here, pull back, and then sometime in the spring or late summer, then be able to get another move in there. This is a pretty big move in here, and they are just plain out celebrating things not being quite as bad. So take a look here at the daily chart, and you will see in here that it looks like, now I'll take a closer look, note that what happened in here is that the stock became a positive momentum stock right here. That's the slim ribbon. Have lots of great emails on how well this has worked for traders, and then it's pretty much danced up the slim ribbon. That middle one is the 13-day exponential moving average, and then right over here it had a big gap on those earnings. That was a 20% up day, and that we will look at as an exhaustion gap. Now it's trying to get back up there right now, but we would expect it to pull back here to the $12 area or so as it fails up around this area. So all that high volume and that big gap tends to be an exhaustion gap. Now the day after that, you can see right over here, that's called a bear kicker pattern, and this move up here looks like what we call a falling three methods. So we would expect it to turn down here pretty soon. That's a look at Triple D. We'll take a look at some other stocks that had big gains in here. We'll switch over from Triple D to WYNN. W-Y-N-N. This stock up 14% on the week as Macquarie, let me get that up here for you, came out and upgraded all of the stocks in this Macau area. So we'll take a look here. That would certainly include LVS, Las Vegas Sands. Now, what I want you to look in here is that it's been traveling up this bullish cyclical period in there. And oops, this one slipped. Sorry, got to put this back. Sometimes that happens. We're going to grab the cycle bracket right here and then move it back into place. There you can see, and we'll get rid of that. Now it's in the right place. I don't know why that happens on this software, but I love the TOS platform. So now you can see it's in place. And then you'll see that it followed this pattern up here perfectly and gets up to this really major zone here. This is a confluence of resistance between the major 23.6 and the 78.6 intermediate fib. That is where we would expect this rally to end, and then for it to get some pullback from that zone into this period into May. We have a lot of things that look like May is an important bottoming period. So we're going to look for this one to falter, but gets a big gain on the week. Las Vegas Sands also similar and also moving up to important resistance area. Take a look here at Federal Express, FDX, also a 14% gainer on the week. Thursday up 9% as their earnings beat. Analysts loving it, all over it, tons of upgrades. Take a look at these patterns in here, and you will see that it's moved up through the major 618 all the way up to this cycle peak right there. Now, the fact that it could get up to that cycle peak at all says that because this was negative, that all of this buying power came in, and it says that the declining power that was in there, all of that energy that was pushing down for that whole period of time, is now over with. So what we look for is a corrective period out over here somewhere, and then another big move over here. So this is a weekly chart. We're looking at somewhere like around in June or so before this corrective period is over that we expect, and then a better stock also. It's amazing how we've had so many stocks that have had these monstrous moves in this period. That really puts into question whether or not we're going to have a powerful bear market resumption at any time soon. So we'll talk about that in our next big picture analysis. That's Federal Express. Take a look here at Tesla, TSLA. This is up 11% on the week, and you can see as these things really are moving up into the top of resistance zone, so many of that, and now the top of this cycle right up here at around 244. So resistance between 231 and 244, that is really an extreme. What's going on in here is that the Model 3 is coming out, about a $35,000 price on an electric car with a 200-mile range. They are hoping that brings some major profitability into Tesla. I tell you what, this is really pricing in a lot of cars, selling of a lot of cars, and based on this pattern, we expect to see some pullback in here. You can see right in here that cycle right there, right over here for at least several weeks, as this seems to be quite overdone, and you got to sell a lot of cars, maybe even at a loss, in order to make what has been a move of 91 points on the upside in 5 weeks in Tesla. For that to make sense, you got to sell a lot of cars. So we think it's way overdone and expecting a pullback in Tesla. Other gainers on the week, well, steel stocks continue to move up as all of this hope of improving economies because of all the stimulus. As we have Schnitzer up 13% on the week, U.S. Steel up 7% on the week. Also, industrial stocks have been bid pretty well. Navistar moves up to an area where I think it's stalling. We're going to look for a pullback to about 1170 in there. It's up 20% on the week. Also, Cliffs up about 18% on the week, but that one has been very volatile. It's testing the high area that it failed from, and we're going to look for a pullback in there. A little cheapy, and our buy area is about between $2.50 and $2.70. And Devon in the natural gas stock category, that's up about 15% on the week. This stock has doubled since it announced a big secondary, and sometimes when you get secondary announcements, it causes a lot of selling, and then people get stuck because they sold based on that news. This one also, we're looking for a pullback. We'll be a buyer in Devon around 24 or 25 bucks. That is the best of the week, and we'll be right back with the worst. Worst of the week. Well, not a whole lot to report. After all, you know that rising tide that lifts all boats? Well, you could say it's that train that, well, if you get in the way of it, you're standing on the tracks, you probably get killed. But in this case, a few stocks did actually move to the downside of the ones that I follow. The first one we're going to look at is a stock that's had a lot of problems, and that is Chipotle. They have had a lot of illnesses in their stores. They're really trying to get to where they can regroup and people get confidence again that they could eat there safely. And in this case, well, they have forecast their first loss, and that has the stock moving to the downside. We actually think that there's going to be a big long base built in this stock, and that at some point, you know, soon, it's probably going to be safe to buy. Take a look here at the Chipotle pattern. First thing that I want you to see is how the top was formed, almost as if all these investors over here knew that there was trouble, right? Big megaphone top. That's called a broadening pattern. It's kind of a reverse triangle that formed in there. That's not a very common top, and when it's big like that, it's often a problem. And we noted that, you know, of course, months ago when that was forming. Now, of course, what happened is that all that bad news hit, and the stock falls from 758 all the way down to 400, nearly cut in half. Now, you could see these rising patterns right in here. That's the cycle brackets that tell us the rising zone, and then the period where it's expected to roll over and then probably get another rally. You can see that. So we're going to look for choppy down in here and trouble for, well, probably into late April, and then we'll look for another attempted rally after that. This whole big basing period could take all the way out till, well, this tells you the story by looking at this cycle bracket right there. It says that right around August is when all this basing period probably ends, and that's how we use the cycles to help us with the bigger patterns in there. So Chipotle has had lots of problems, down 10% on the week. Also want to look at Sears, SHLD, as we look at, you know, the things that are kind of the most interesting in here, as well as the biggest moves. This stock, which I have been negative on for a long period of time. In fact, you can see in here, I still have the note that it was listed in my worst 18 stocks for 2015 last year, and you can see what it's done. Note the timing in here, right here, in that we are looking for a bottoming to come soon. Actually would be surprised to see anything more than another couple of weeks on the downside in here, and then probably more discussion about what the value of their real estate is and some attempted rally. The rallies would normally come to the 34-week moving average, so we'll look for a move from 15 to around 20 or 21 at some point in the next couple of months in what is still a horrible condition of a business, and that is Sears. In a long term, lots of trouble. Probably a minor bounce coming for a couple of months. Next one we want to talk about is Amazon, AMZN. This stock in here, note our projection in here as we see the stock lower coming months. Now, the news here this week, stock only down 2.5%, but Apple's essentially moving from AWS, Amazon Web Services, to Google Cloud. And we have felt that there was trouble in Amazon all along, besides massive overvaluation on the stock as people buy into the thought that they build this big ecosystem. The fact that this decline right in here gave up about 90% of this advance from this cycle bottom, that tells us the odds are very high that a major top is formed. We anticipated that there was going to be an upside move in here to the resistance zone. It nailed the 50% number right there, and note the perfect evening star if you're a candlestick trader right there, which says lower prices to come. Stock has been down for the last couple of days on that news. I want you to see the shorter term pattern in here that we have, and you can see these smaller cycle patterns. So we were looking for a decline in here from this resistance zone, and that probably has another couple days. Note support in here between 530 and 542. So we'll be looking for a kind of a bounce right in here from this zone in the next couple days, looking like this, and then setting up what should be a great short side trade after that. So we were actually shorted in here, took some money in the bank, and now we'll be waiting for the next bounce to short it again. So Amazon, what we consider to be a stock that is in trouble. Other downside movers for the week, really drugs and biotechs have been the worst group of the week. They've been very weak, down 2 to 3% against this trend of a stock market that's been up some 2%. So it's really, we'll call it the Hillary syndrome, as she continues to point at this group as a group that gouges on prices on drugs. So she's aiming at it. And, as long as Hillary's in the lead in the polls, we expected this group to do poorly. And we are actually seeing that now. Did you catch what Hillary said about putting coal miners out of business last week? So, well, actually, President Obama took care of that one. Anyway, that's it. The worst of the week. And we'll be right back with some great emails. I really loved your emails this week. They were, well, complimentary, some great testimonials, and challenging also, as a lot of such interesting emails came in, and took some explanation on some of them. I wish I had time to bring so many more of them, but I do want to keep this kind of tight. So we're going to just look at a few of them. One thing that I want to talk about that I did this week was, well, I did 2 segments that really seemed to stimulate responses from viewers. One of them was a trader psychology segment where I talked about our big lie. Now, that's a really interesting topic, and it really has us looking at things that happened in our past and how they affect our present and our trading. Really worth watching. And then I did a segment on the break in the dollar, in the US dollar, and how that affects historically different markets and how they correlate. A lot of great responses on that. I'll share a little bit of that, but I do want to start out by sharing this great email here after I did that trader psychology piece as one of the great examples of testimonial to doing segments that really have us looking inside ourselves. This is that great email. It says, "Hi Slim, I just wanted to send you a quick email and say thank you for all that you do, as I do not write often and I want to encourage you to keep up the good work. I still follow your work and charts and find your insights to be valuable to me. Today I listened to your video on trader psychology, and I was so very impressed with your authenticity and candid sharing of your background as a trader. It's obvious that you have learned so much through your own evolution on your journey as a trader. Your ability to share the good, bad, and ugly about yourself helps me not only continue to acknowledge my own issues and continue to work on them, but it gives hope that as we learn to manage ourselves and our lives, we get better at managing risk, fear, greed, and in return know our own tolerances that help us walk down our road of progress." Donna H. Wow, Donna, that was a fantastic email. I'm really so appreciative of that, and for all of you out there that sent those other great emails regarding those 2 segments, thank you very much. I'm going to bring one more a little bit later on in this segment. Next thing we're going to look at in here is the chart of Apple. Don E. writes, and he says, "Could you revisit Apple for your Friday review?" He says, "It seems we have rallied up into what was thought to be a cycle timing low time frame. Still some time in a declining window, in my opinion, and I'm going to show you that. And though there's less time in there, and of course all my analysis is based on time, it suggests some minor pullback but then another rally. So I'm going to show you that chart of Apple, AAPL, and I'm going to start out, as I always do, by looking at a weekly chart, because that's where the cycle analysis is done on the intermediate term. So I'm going to bring up that chart for you right now. This is Apple on that weekly chart. And what I want you to note in here is there are cyclic patterns that we look at. Cycle patterns are the essentially a visual look at the flow of money. And we show that by looking at phases, rising phases and declining phases. So here you could see this dotted line in here. That is this showing these rising phases right in here. And then there's the corrective phases right in here. And you could see this corrective phase brought this decline, this corrective phase in here brought this decline, and now we're in this rally phase right here. And we put in our resistance level right over there on our weekly charts, and you could see that the number is at about 108. The stock is trading at about 105.70 right now. So that shows you our intermediate term is rising. So what you said is that it looked to you like the stock should have been declining, and you're getting that from the daily chart. And let me show you that right in here. And of course, Scott is a I'm sorry, not Scott, Don, who sent this, is a subscriber to the chart, so he's looking at this. So what he's looking at right in here is that these two cycles are nesting and coming down right in here, which suggests we should be in a declining phase. You're right about that. So what happens is that when you get into a declining phase and it doesn't decline, the time runs out. You can see in here there's about a week's time left in here for the stock to pull back. That, when that happens, it tells us that, well, this is a positive upward stair-step pattern going on, and you could see how we have projected that in here, that it gets up into this resistance zone. So what we're looking for is a small window of decline. This support comes in at about 103.60. You could see the 13-day moving average, and I'm going to lift this up right in here, and you could see coming up to about the same level, and that's the slim ribbon, which tends to be support. So that's what we're kind of looking for, a pullback from this 105.70 to about 103.60, not very much, a couple bucks, and then moving up again. So you're right in what you said, that there is a window there that it should be declining, and it's not, and that's actually bullish. So we're going to be looking for alongside entry in Apple. Don, thanks for that. Mark L writes me about Google. Interesting. He says Google has broken through a daily resistance level, and how, if at all, does this impact the bear flag that we're looking at on the weekly pattern? So I'm going to show you both of those also. And you know, the truth is that usually when a stock moves up through a resistance level by a little bit, I don't really consider that to be meaningful. And in Google, I'm going to show you that the long-term pattern is pretty negative. Now, Google got a bit of a bounce as the news came out that Apple was going to move their cloud, they're going to move to Google from Amazon Web Services, and so Amazon got hit really hard on that, and Google got a little bit of a bounce, not as much as you would have guessed. So we're going to take a look at the Google pattern. We look at GOOGL, which is the A-class stock, and we're going to start it out by looking at that weekly chart that you are talking about, and I'll show you why I believe that this is a negative pattern. So we'll start out right here as we look at this cycle chart in Google. So the first thing to look at is the cyclic action. and you can see there are actually two cycles in here. One is shorter than the other, and sometimes when they nest together on the downside, you get some pretty hard declines. You can see that right there. Now they were both rallying right over here, and you got the big upside rally, but it came all the way down to this level and broke it again. That sets up a negative pattern. It says at some point we turn down into this April period right there, and that's this dotted line that you can see there. So this is the bear flag that's forming there in Google, and Google, as we look at this on Friday, is down today actually after that news about Amazon and Apple, and so we're expecting it to come down. Now how far? Well, cyclically it looks like the test of that low somewhere around 680 makes a lot of sense. So that's quite a decline, 75 points or so from present level. So when I look at this on the daily chart, so I'm going to blow this out for you, and you will see there's that flag in there. So on the short term, first of all, take a look here. Our daily chart we consider short term. There was a big volume exhaustion gap right here, and then the stock collapsed. Now this is where it broke that important low we showed you on the weekly. Best case we can make is it moves down into the support zone, 730 down to about 720 right there, and it stays in the flag. This is that 680 number that we're talking about. That is a pretty strong likelihood. So everything about this pattern is negative, and you can see in here, you talked about it getting through that resistance zone right there. Well, it actually almost gave you a gravestone doji, and now is turning down and creating this evening star. Everything about this Google pattern that we're looking at is suggestive that the stock is going to head lower. So good question there. And I want to say that everything that we look at is odds. We think Google's going lower, and based on what we're looking at here, it's totally an odds play. The next one is from Kyle C. Kyle's a real student of my work, sends me some great charts, some comments, and great analysis. I'm going to share with you his analysis and just give you an idea of the kind of stuff that he sends me. You can see right here asking me about Baidu, and he has on here questions about weekly analysis and about the market condition indicator. That's my proprietary indicator, and resistance zones, and really talking about odds. Really good stuff, and I want to go over what he has to say here, and to do that I'm going to bring up the Baidu chart, and we'll take a look at both the weekly and the daily and discuss Kyle's analysis here. So we'll start out at the weekly chart. Kyle believes that this is a positive phase going on, and I'm going to show you what a positive cycle pattern looks like, and that we're in a rally phase. So here is that Baidu chart. So Kyle says that the cycles are in a rising configuration essentially. So what does that mean here in Baidu? Take a look here at that Baidu chart, and you will see that this low right over here, which came right on time, is above this low over here. So this is a positive configured chart. He sees that it's coming up to the top of the resistance area right over here. Good analysis. The market condition indicator, which I'm not going to put up, but I can tell you has moved positive also. And what Kyle's point here is on the weekly is that the odds are better than 3 to 1 that this high gets challenged when you have this positive configuration in here. So that's Kyle's first point on the weekly. So when I switch over here to the daily, and it says here that the cycle pattern looks to be positive. Now, I don't have the daily cycle patterns on here, but essentially what he is looking at is this low right over here and this low right over here, which gave up only a little bit of ground. And if you look at these other lows, like right in here and right in here, you can see that there is a equidistance area between these lows, and that's how we visualize the cycle rhythms in here. So we use our cycle brackets to show us that, and a little demonstration right here as I grab these cycle brackets and just go into this section right over here, and there you will see how these line up in here very, very nicely to the lows that I just pointed at. And this in here shows that it's struggling only a little bit at this 89-day moving average, getting back up to this shooting star. So based on the cyclicality that I'm looking at in here, Kyle, it says to me that this is the pattern that you saw, and this is the next rally, which is starting to struggle. I would look for a pullback in here, and then after that, the next rally phase at getting you up and testing those highs that you're talking about. So good analysis overall. I would say the stock has become a bullish stock. I just think on the short term, it's acting a little bit like it's time for a pullback in there in Baidu. Always love getting your shared analysis in there. Next one is from Scott in Japan. This is a really interesting one, and I'm going to share with you a chart in here that I think is going to help with a question that many people have about this topic. Scott writes, and Scott is in Japan. I said to Scott, wow, Japan, I can't believe, from so far away. And he said to me, Japan's just on the other side of the internet. What a great answer. He said, I made enough money in your rankings and setups, which is our level 3 subscription, to pay for that subscription. He says, now I may get the chart, so thanks for your hard work and inspiration. His comment is that last week you heard me say in the email section that UVXY, that it is, which is a leveraged ETF based on VIX futures. He says that it always, he said that I said it always goes down, and wants to know, is that strictly true? Well, I'm going to show you the Baidu, the UVXY chart in 1 second. And then he gave a long explanation about things that he has seen on my old network and about their discussion about contango and backwardation and how that affects the fluctuation in the level of volatility on volatility. Are your eyes rolling back in your head as I'm talking about this stuff? Actually, I don't really like going into that. Yeah, backwardation, contango, that does affect the rate of decay in the options of the volatility products, and especially in the leveraged ones. But I want to give you a very simple illustration about why these leveraged products are not for long-term holdings, and really they have a built-in decay to them. So we're going to look at UVXY. First out, what I want you to do is see the UVXY chart, and you will see in here that there's something really weird about it. When you look at the weekly chart that I'm going to put up right now, you will see that, let's put this weekly up, that the price has come all the way down from like 491,000 all the way down to 22, where it's trading right now. Then you see this long line on the bottom right in here. And now if I zoom in and just look at the last year or so, you can see that it's come down from, well, 160 down to 22, right? So we all know that implied volatility doesn't fluctuate up to 160. What this is that there is this built-in decay, and because of that, they have to continually do reverse splits in these things to make them tradable. But why does that happen? So I want to give you a very easy explanation to see. So here is that explanation of the drag in leveraged ETFs. So here you go. So this is explaining the drag, right? So here's the scenario. UVXY, which is the ultra VIX short-term futures ETF, versus the VX, the volatility futures. So in other words, when the volatility futures VX goes up, you would expect UVXY to do the same, but at a 3 times rate. So let's look at this scenario here. The same thing happens if UVXY goes down. If it fell, it would then fall. If the VX fell, the UVXY would fall 3 times as much because it's a triple leveraged. So what we want to look at here is that this scenario. Let's say that the VX futures that you can see right here is a 20. Okay, this is just a hypothetical scenario. It's not far from there. Let's say it falls 5% to 19. So this is the scenario we're setting in place for you to see. The next thing that I want you to consider is that UVXY at the same time is 24. So let's say if UVXY fell the appropriate amount, which is 15%, because it's 3 times, that would fall to 2040. So UVXY should fall 15%, 3 times as much as the VX. So that's the scenario. Let's say that happened. Then, let's say that the VIX futures, /VX, goes back to 20. That is a gain of 5.26%. So that's normal fluctuation, right? UVXY should go up 3 times as much, right? So that would be 15.78%. So if UVXY goes up 15.78% from 2040, it only goes back to 2362. Remember, it started at 24. So there's a loss of 38 cents in the relationship to VX. The normal up and down swings keep dinging the leveraged ETFs in this way, because of course when it goes down in price, right? And when it goes up, it comes up based on the percentage gain of that lower price, and that causes this downward zigzag. Every time there's a zigzag in these leveraged products, this decay that's built in keeps bringing it down. Now, there's other reasons for decay in leveraged products, and those are that there are costs involved. And yes, when there is a contango, that is the further out priced ones are more expensive than the near in priced ones, and there's a big gap, they have to roll the futures so they pay more, so that dings the price also. The bigger the contango, the greater the ding. But basically, it's this fluctuation in the market that causes all of that. I hope that was a clear explanation, and that you consider strongly about buying any leveraged ETFs for long periods of time. They are strictly for short-term trading. Last question is from Jeff, and Jeff says to me, Jeff S., and Jeff is in Canada. He says, great piece on the dollar correlation. He says, wanted to know asked me what the correlation is between soybeans and wheat and corn versus the dollar. Now, I compared in this last piece I did the dollar versus most of the other indexes and markets, but not the grain markets. Truth is that the correlation between the dollar and grains is really erratic. It tends to follow commodities over, let's say, the majority of the time, but far less of a good correlation than in oil and in gold. So I would say don't look for that. And he also asked me, he says, I looked at your the topic of the of oil and the dollar, and he says, I don't understand how under these conditions of oversupply in oil, and which seemingly hasn't been corrected, and now oil having moved back over $40, actually 42, Jeff says, I don't understand how we can look for a lot higher prices even if the dollar falls. My answer to that is, first of all, the oil market, the investors in the oil market see oil as stabilizing right now. So it's not so much the price of oil stabilizing, it's that the balance of supply and demand is beginning to stabilize. And there's a meeting, of course, coming up between all of the oil producers in April, and they're talking about freezing the level of production. So that's given a boost, both of those things, to the oil market. Truth is, over the 20 years I looked at in this comparison, there was, there was never a time when there was this much of a supply-demand issue, though when the dollar crashed just a few years ago and oil had a big move, there was suspicion about that as oil went to $147. In this case now, yes, the weak dollar has helped and given it a lift, and I expect to see a lot of volatility in the oil market. And my projection of 45 for the year, which I did at the beginning of the year, I think still holds up. And I think we're going to be in a 35 to 45 range in oil. And that's even with what I think is going to be an extended period for the weak dollar. Good question on that. Thank you all for the great questions, and looking forward to your questions next week. And now we're going to get to look at oil and the other markets as we do my short-term view. Short-term view of the coming week. Before we get into that, don't forget to click through to the askSlim.com website. Take a look at our memberships. We have 4 levels of memberships in there, and this video that you're seeing right now is our free level, all of our archives of our Free Friday show. And then we have 3 other levels that are all of our charts that you're looking at right here, and our rankings and setups, and 7 categories of videos. It's just an immense amount of information that you get on a weekly basis and can continue to refer to. So make sure you go take a look at it. All right, let's get into our short-term view. We are one of the few analysts that come out and pretty much rate ourselves every single week on our short-term view. We really feel that, getting to 65%, 2 to 1 at 65% being correct, is really a good thing, as we average probably a little bit better than that. This week we're going to say we were about 55%. We did miss by a little bit on the light crude movement. It hit our low and perfectly on the slim ribbon that we were looking at, but then it rallied further than we expected. A lot of help came from the break in the dollar. The same thing happened in the euro as it got a bigger move on the upside than we expected. We'll give that one a total miss. And the stock market, the VIX, we pretty much nailed those, expecting further rally to come. So let's take a look in here at our short-term view for the coming week. What we do always is start with light crude and look at then gold, the euro, the bond market, and the stock market. So what we were looking for last week was that it comes down to right around over here, 37.18 or so was our downside target. It didn't quite get down to there, that short-term support zone, and then we thought it would rally. We have a little better clarity now on this pattern than we did before. You could see that pattern right there as it follows it, and now in this next rally. But we got into this intermediate resistance area, and we really don't think it's got much more on the way in upside, even though we do expect that sometime later in the year the 45 number will be hit, which was our upside projection. So for the short term, we're really looking for the next few weeks to be a correction in here in light crude. Probably a lot of chop and volatility around this discussion about this April meeting for producing nations, and we will look for some wide swings coming into and around that time period. This is probably pricing in a lot of that already. In the next week, we're going to look for a choppy down week. We're going to look for this pattern right in here to give you a test of this support between 40 and 39.20 right there. So we think that there's going to be some pretty good down ticks this week, maybe at worst a couple of bucks on the downside, as here on Friday you can see it begins to stall right there. So that's a look at light crude. We'll call it a choppy down week. Next thing we're going to look at is the gold market /GC, and here you will see, as this chart does come up in our short-term pattern, really what we were looking for. And you'll notice in here we had talked a lot about, and we did this on our Future Speak, our Wednesday video on the futures markets, that there was a whole area in here where there was a lot of nesting of cycle patterns, and we felt there was going to be a decline there and then another rally on the short term. Well, that pretty much happened. In fact, the stocks in the gold segment, gold stocks, they are very strong, is the GDX, and the red cycle here is the GDX pushing up as that continues to be strong. So what we have forming in here is these two little bars that you see right in here inside this body. Generally that comes in threes. You might get another little one here. It's called a rising three methods if that forms, and then you get another move on the upside in there, right there. We are looking for a continuation. You could see our blue dotted line there. That's our forecast. We still believe a test of this 1237 to some major resistance up there around the $1,300 number is really where we're going on the short term, and then into some bigger correction. We're looking for 1180 after that, and these cycles in here, as you see them rolling over into April, is really where we think we're going to get that 1180 number in gold on the longer term. Right now we're looking for this rally to continue. We'll call it 1287 to 1300, and choppy, and probably fail from that area. So we'll still say positive here on gold. Next thing we're going to look at is the euro currency /6E. And this, again, looking at only the short-term pattern. Now, what you can see in here is that, well, this rally off of, see this big spike right down over here? That was the ECB right there. Then you got this bullish triangle that formed right in here, and then the Fed news comes out and it continues on the upside. This, of course, is the inverse of the dollar, which is really in a breakdown and bad news when you look at the dollar going forward. We still think it's going to 90 this year. So now we're probably in a corrective period. We'll call it a minor corrective period and a modest correction. So you can see this pattern right here, then another rally. That's what you see right over here illustrated. We expect the decline to come in here and test some minor supports in here, right around this area of 111.80 right there to 111.15. So we're going to look for a pullback this week into this support area, and then after that getting another rally right there. So minor pullback, minor correction in here, but still a condition where the dollar is so weak that you can expect rallies in the dollar to fail, and then more on the upside here in the other currencies. So that is a look at the euro currency. Take a look here at the bond market, and you will see in here basically we're in the same analysis that we have been in. We have felt that the intermediate pattern is in a decline, and that was going to last for a couple more weeks, and you can see that decline going on right in here. So this has a little more time in it. We're going to still look for 1 or 2 weeks of choppy lower action. We had anticipated that we would see about 127 on the downside in here. This actually, I'm just getting a sense that it's not likely to be quite that low in there. There is a resistance area here. We'll call it 129.20 right at that area. We expect it to test that and then roll over in here one more time and get down to this same support we talked at last week, right around, we'll call it 127.28 or so. That's really the pattern we expect, and then we expect a much bigger rally in here, and that's related to where we think the stock market is going to give up this rally and then get some bigger decline in there. So we're going to call this week a test of that resistance around 129.20 and then beginning to roll over. So we'll just call it a rolling weekend there, and overall it should be just a small net of movement in there in this 10-year. So the stock market, last week we talked about that we thought it was going to continue on the upside. Now, this is against the trend of the bigger picture that we had believed was in place. And we still always give weight to the shorter term patterns and say we've got to look at those and say, let them tell us the messages about the bigger trends, and so we always rely on that. In the case of the S&P 500, what we said was that it was going to likely get up to the 2020 resistance, 2023, and then potentially move into the 2042 to 2052 area, where there's a much bigger resistance area. Well, that's precisely what happened, and then today on Friday, as it got there, we started to get some pullback. So that's probably setting up what should be the beginning of a rolling over in the stock market and then some correction. Now, we have a slightly different look in here than we did before, and that is because of the way these patterns are setting up. So this is now what's changed is what we think is going to happen a few weeks out from now. So this rally in here came pretty much as expected. It moves up to that confluence area right over there, and today gets up there and then starts to wiggle. It really has not given back much ground in there. It fell off and then came back a little bit. So we're looking for the stock market to stall here. It could pop through a little bit and then come down, and then start to roll over. And then the next, we're going to call it 5 to 8 days really, move down into this support zone. Our downside target in here for the next 1 to 2 weeks is in this area of let's call it 2010, or maybe a little bit lower down to this area of about 2001 or so, is where that minor support zone comes in. So we had originally had this as sharper in here, and then a rally and then down. That was our original forecast. However, now that we have gotten up to the 78.6, there's a message in there, and that is that the big energy that was pushing on the downside in the past is not playing in here whatsoever. So what that says to us is that if it's going to come back, it's not likely to come back in this cycle. What we're likely to get is minor correction, another attempted rally, and then if it fails from this area, then you get bigger selling after that. So we're going to look for this coming week to only have this minor correction, well, 40 points or so on the downside in the S&P 500 in the next 5 to 8 days, and we would call that a minor correction in the S&P 500. That is it for our short-term view. We hope that you have loved everything that you have seen today. Great emails from everybody. Really appreciate that all week long. I wish I could bring more of them, as I said, and I really hope that we have a lot of new people that are seeing our videos out there. Drop me an email. Let me know what you thought of what you saw. That's it for the week. I hope you have a great week, and we are always wishing you great trading.
Well, I'm going to sit